Okay, great. Thank you, Anna. Very nice to be here. I'm going to be honest with you. I got the question from Peter at Campsec, I think it was actually 1 year ago or something. He said, yeah, we have this conference in Berlin in October. It's going to be very nice, and I think you should come there and talk about the investors' perspective on the system chemicals. And I was like, yeah, October in Berlin, some dinner and drinks. And here we are now in February in Gothenburg. Nothing against Gothenburg though. I love the city, but yeah, now I'm the last woman standing and voting you for your dinner and drinks. So I hope you can bear with me just a couple of minutes more. So my name is Victoria, and I work as a senior sustainability analyst at Storebrand Asset Management. And I represent the investor side of this panel today. I'll talk about how we as investors approach this issue, and I agree with Maria, I was a bit overwhelmed with all the presentations here today. This is not really my field, more into investments and portfolio construction and those kind of issues. But we have actually been working quite a lot with on the topic of hazardous chemicals for the past 2 years. So I'll talk a bit about that and how we can act for market transition, which is the topic for this last section. So I will start with just a brief introduction to Storebrand. So we are the fourth largest private asset manager in the Nordics. We are part of a financial group headquartered in Oslo. Storebrand, we are offering pension, insurance, and saving solutions. And within the asset management arm of our business, we manage more than 1,000 billion Norwegian crowns on behalf of our clients, trustees, and which is invested in more than 5,000 companies globally. And the management of these funds also very much rests on the foundation that they should be managed and invested in a sustainable way. Within the financial industry right now, we're talking a lot about sustainable investments, ESG, you might have heard of, as also addressed earlier today, EU taxonomy, sustainable finance, disclosure, regulation. There's a lot happening with our field. I won't go into it right now, but it's connected to this topic, which is very maybe important to have a look at. So from a more general perspective and looking at hazardous chemicals, we as investors, we address this very much from a risk perspective. So we believe and we have seen how the issue of hazardous chemicals can influence the company's bottom line and through regulation, litigation, and reputation risk. Use this example, the Environmental Protection Agency in the US last year did a plan to toughen rules for persistent chemicals. We're seeing this now in the EU, looking to tighten legislation, as we've also heard today. And we have also seen some examples in recent years on lawsuits filed against PFAS manufacturers, for example, all of which can be translated to financial risks and downside risks for these companies we're investing in. So we have seen how chemical substances, which might not be considered a problem today for certain producers, might become significant liabilities in the future with regard to compensation costs and legal responsibilities for these companies. And as we're seeing this legal and regulatory development unfolding, we're also seeing that settling these lawsuits is a very costly business, which also impacts us as shareholders in these companies. So in the finance world, when we look at a company's balance sheets, we look at their assets and their liabilities, and we have seen how some chemical companies have been forced to make provisions in their balance sheets to cover for compensation and cleanup costs linked to these issues. So we see the continued production of resistant chemicals builds in a future business risk and liability, which, given this legal development we're seeing, eventually will have to be priced in the company's share price and weigh on the company's valuation. So as investors in these companies, we're therefore concerned about this. and want to limit our exposure to these risks in our portfolios. So how have we as investors gone about and addressed this issue? So for us, it's very important with information and data. And I will also echo what was previously raised over here, that we need financially material and information and data on companies. And I would say that hazardous chemicals are one of those issues where we see a lack of disclosure. These days, big companies are getting pretty good at disclosing a lot of information on sustainability. Many chemical companies are keen to communicate their green products, but not which hazardous chemicals they're producing, and in particular, maybe the volume of these hazardous chemicals. So they're producing thousands of different chemicals, but as investors, we have very limited insights into and information about these chemicals, potentials, and volumes. So it's also a very, I would say, complex issue. Coming from the investor side, this is a complete new world for me. You have PIGS and POCs and lots of different abbreviations, which is not something that I'm particularly good at and understand. So we needed help from an expert, and that's why we have decided to collaborate with ChemSec to rank and compare how companies are performing. They have the expertise and scientific understanding, which is very helpful for us in our work. As investors, we also have many different third-party ESG data providers we're using, which helps us with research into companies. But we also saw the issue that some of these data providers, they can rate the company as low risk or A+ on sustainability in general and overall. But then when we looked into the ChemScore ranking, we saw that they scored quite poorly due to the production of hazardous chemicals and lack of management of this issue. So this also, to us, gives us a sense that some of these data providers we're using, they're not really able to compare companies in a sufficient way. They're not producing the data and reporting on what is financially material for us as investors. So there's an imbalance here, we saw, in terms of materiality and financially material information. So based on this, we saw the need to use ChemScore as a tool. We find it very useful to identify leaders and laggards, and so that we can direct more capital towards better performing companies. And then 2 years ago, we decided to take more action, because as investors and shareholders in these companies, we also hold an ownership stake. So with that ownership also comes a responsibility, I would say, and possibility to influence companies as a shareholder. We can, for example, engage in a direct dialogue with companies. We can raise the issue to top management and the board of directors, or we can raise our concerns at the AGM for these companies. So we're using our shareholder rights to vote. And in 2021, we took the initiative, together with Aviva investors, to send a letter to all the companies that were ranked in the ChemScore ranking. And following that, we also, as Storebrand, decided to engage in a more direct dialogue with 3 of the companies in the ranking. And we also got a lot of support from the ChemSec team, providing us with expertise on this very technical issue in those dialogues. And then last year, we sent a follow-up letter to these companies, asking them for a time-bound phase-out plan for persistent chemicals. And this letter got support from 47 investors with 8 trillion in assets under management. So it also received a lot of attention in financial media last year. So it really shows that when investors join collaborative and join forces in efforts like this, it sends a very strong signal to the market that this is what we think is important, and that we are ready to use our capital and assets under management to back up our claims. And this also seems to have yielded some promising results. In December last year, 3M announced an exit from PFAS manufacturing, and they explicitly cited investor demand as one of the key drivers for taking this decision. Of course, there are many factors playing into this, but one of the driving factors. And the three companies that we Storebrand engaged with, so the Norwegian company Lidén, Umicore, and 3M, they also showcased improvements in the ChemScore ranking compared to the previous year. Especially Yara and Umicore significantly improved their score and ranking. So I think this really also shows some promising outcomes. In fact, that we as investors can, and with ChemSec and their expertise, can team up. We can act as a catalyst for change and be a driver for a transition in the markets, and we are ready to do so. So I would like to finish by saying that we acknowledge that the production of persistent chemicals presents a future business risk and liability for us as investors. It's something that we want to protect our investment portfolios from. So we're managing these funds on behalf of our clients, and we are going to retire in the future and want to have their pensions secured. I think this is an important financially material issue to look at for us as investors. There's the importance of this. And I also think that the ranking provided by ChemScore is a fantastic tool for us as investors. It's very beneficial to identify leaders and backers. I think a ranking in this way creates a race to the top. Companies don't want to be in the bottom half, especially when their shareholders are saying that we look at this and want them to improve. And it's also very useful for us as a basis for engaging not only but with the companies, so that we have the backing from and the scientific expertise to back this up. And this work we have started will now be further accelerated and formalized. So I think today, or something, we launched an investor initiative on hazardous chemicals. A group, we as investors will coordinate with them to engage with companies to drive change and transition. And we are co-sharing this investor group together with WI investors with the support and coordination from ChemSec. So I think this is really also a good example of how we can act as a catalyst for change and drive transition in the markets. I think that was everything that I wanted to say.